Welcome to Investment Wars. I'm Joe Halpern, and this is a show about the stories we tell in markets and investing. We all love a good narrative, but we tend to build them from the data points that confirm what we already think and ignore the parts that don't. In investing, that instinct is expensive. A hot take is not a strategy. Access is not the same as responsibility, and smarter investing usually starts by asking better questions. On this show, we break down big macro themes, pressure test the ideas everyone is talking about, and dig into the deeper forces shaping how markets actually work and how investors should think. Investor Wars is brought to you by Obsidian CIO. We help advisors and investors think more clearly, invest more deliberately, and build portfolios with institutional discipline, not just more product. This is episode 37. Let's get into it. Welcome to Investment Wars. I'm excited to be speaking with Zvi Mowshowitz today. He's the author of the popular Don't Worry About the Vase Substack, where he has recently been focused on AI. He is a rationalist thinker with experience as a professional trader, game designer, and competitor, and startup founder. Most importantly, he is someone who has spent years thinking deeply about prediction market construction and design, and believe he's consulted for multiple prediction market companies. And that is what we plan to speak about today. Thanks for coming on the show, Zvi.
Absolutely, good to be here. And full disclosure, I'm an advisor to Polymarket.
Thank you. So let's get right into it. Prediction markets are framed as powerful forecasting tools. What I'm interested in is how much real economic value do prediction markets bring?
So that depends on asking the right questions. You find out whatever you ask, right? In the sense that, like, to the extent that you bring liquidity and interest and eyes to that market. So if you ask questions that have high VOI, then you can typically be worth quite a lot. If you're asking questions like, will Elon Musk tweet more than 25 times in the next 24 hours, you'll produce very little economic value for the most part, right? But when the prediction markets bring us like unique ways of like isolating on key decisions or key events, such as events around wars, it can be incredibly valuable.
So I'd love to get, so my favorite example of the Elon Musk kind of questions is Jesus coming back? And I think from your construct of prediction markets, it's not a well-formed question because it's questionable over whether everybody would actually agree that he came back. But let's go.
What you're actually asking there is the risk-free rate of interest, right?
That's right. You may also be taking advantage of some zealots, but I don't know. We could get into that later.
Right. There's some minor uncertainties, so you're taking advantage of them to create some liquidity. But like anything else, if you're offering me risk-free returns, we're all going to bid that down to whatever the risk-free rate of return is, and we're going to correctly value the probability of Jesus returning at approximately 0. And if Jesus does return, then I'm not going to worry about it.
Fair enough. So let's go to questions that we believe do bring ROI, do bring some value to the economic market. You just mentioned the war, the 2026 war in Iran. Can you give some examples of maybe what would be a well-formed question there that brings economic value?
So if right now I wanted to know a specific question, right? I would want to know if they're going to reopen the Strait of Hormuz. And if they're going to reopen the Strait of Hormuz, like this week, next month, and what does it mean for it to reopen, right? Will there be a toll? How many ships will be allowed to go through? How many ships will actually dare to go through? And so there are various different ways you can quantify this. And straightforwardly, I would just start asking the question, how many ships will pass through the Strait of Hormuz by date X, right? Or how many tons of free capacity will pass through there? And perhaps like what amount of toll, if any, will they be required to pay? The key is it has to be, as you point out, it has to be specific, right? It has to be numerical, measurable, and it has to be something we can verify. Otherwise, you get into a lot of trouble. And so like a bunch of the war markets got into trouble with things that were not so well specified. Like, was there an American incursion? Did we invade Iran? Well, we had some ground troops that rescued one of our downed fighters, and then we got into this big fight up where there were ground troops in Iran. And like, by spirit, no, but like by definition, probably yes. So what do you do?
I think there were questions like that. Did those pay out positively or negatively? Or
I don't know exactly which they paid out. So like partly because I'm an advisor, partly because of various priorities I've set in my life, I try not to participate myself these days in these markets. And so I don't track like how these things often resolve. Like resolution is always key. So that's one of the things that I was, when I was more involved in the day-to-day for a while, I tried to help structure questions. One of the key things was like, how do we make bulletproof definitions of questions such that there will never ever be a corner case, or the corner cases will be as minimal as possible, such that like everybody understands with an unavoidable confusion, and then we leave it to the oracle of some kind, and then hopefully everybody is willing to accept that.
Got you. So the question of how many ships go through the Strait of Hormuz, and we'll ignore the transponder issue and all that kind of stuff. So it's like countable ships that go through the Strait. I'm curious, so I could see it as a hedge perhaps for certain industries, and I guess maybe I could see it as a hedge for shippers. I mean, where do you see, like how does, yeah, go ahead.
So the key in any market like this is you have to create liquidity, you have to create demand. So you need somebody who doesn't need to have alpha, right? Who wants it as a hedge, who wants it for information. And let's say, you literally have a ship and it's waiting to go through the strait. This is a direct way to hedge that exposure, not entirely clean, because you don't know if your particular ship will get to go through, but it is a way to get exactly the question. And this is where prediction markets have their biggest advantage over traditional financial markets, right? I can bet on the price of oil. I can do any number of proxies, but that proxy is measuring a lot of different things. And it's not going to be as hooked up and cleanly correlated with the thing I actually want to hedge, the thing I want to actually measure, as I would like. And in the prediction market, you can find exactly the thing that I want to know and narrow in on exactly the thing I want to know without having to then figure out how to translate between that and a lot of the implications of that event.
Okay, so in that example, I guess it's a very, very, potentially very quick way, if it was more maybe institutional, I could view it as insurance. So if I'm a ship and I'm stuck there, I'm a shipping company, I'm Maersk. I don't know how much they deal there. I have 20 ships there. That's a very quick way of buying insurance. I'm not sure exactly how I'd construct the hedge, but I'm fairly certain if I thought about it for a little, or if we just said, Zvi, could you think about it for a little, we'd be able to do that. Is that one use?
Right, as opposed to like if you are like in India and you need oil next month, you can buy oil futures, right? Rather than buying this direct transit, but that doesn't necessarily fix everybody's exposure, right? Everybody has a different type of exposure.
Right, and then, just staying on the theme of economic value, what that does is it lowers the cost of Maersk to do business, I guess, which translates to better pricing for everyone conceptually, or better margins for everyone.
So it does lower the cost of doing business by making the insurance market more efficient, but I think that's a secondary benefit. I think the main benefit is that we get the information from the market. So we understand what the risk is in this situation. That lets us make better decisions. That lets our government make better decisions. And that lets private industry make better decisions. And that lets everybody who wants to plan make better decisions. And to me, that's the biggest deal. Like when I go to Polymarket, right, or I go to any other prediction market, the primary thing I'm usually looking for is information to help me understand the world and to help me make better decisions. When the questions are well targeted, that's incredibly valuable. The problem for me is I'm in artificial intelligence. And a lot of the questions you want to ask are either very hard to quantify or longer term than prediction markets traditionally are able to generate good markets for, or both. One of the things that I do is I try to think about like what are markets that we could put out that meet all of the criteria, because when I can do that, then we get to learn the actual answer, and that becomes very fascinating. And when we can't quite do what we want, then we have questions like, who will produce the best model, and that has to refer to some quantification. So traditionally it refers to the LLM arena, and that's not the best measure, but it is a measure. And then we try to figure out, okay, how much does that correlate to the thing we're trying to measure? What does that imply? What's the bias in that? And we try to back out what we want because we don't have a better way to do that.
All right. So it does boil down to, and this is definitional, they are forecasting tools. And so prediction markets are forecasting tools where we're using the population. There's some amount of knowledge. I understand we don't want insider trading for, maybe if you don't mind just defining that very quick to explain why we don't want it. And these markets are still new, but you want definable questions. You want a lot of people to participate, but you don't want insider trading. Is that accurate?
So insider trading is when someone has material non-public information, right? Knows something that we don't know that is relevant to the value of the thing that they're trading, and they trade it anyway. And in the stock market, we really don't want this, because I have to worry that somebody who knows what's going to happen in our military operations is then suddenly buying and selling oil right before something happens. Then every time I see a price and I think that price is too cheap or that price is too rich, I have to worry that I'm trading against somebody who has this information and I will just lose. Right? And so if I try to provide information to the market and I have to worry someone else has other information that's hidden, then I'm much more reluctant to trade and I'm much more likely to lose money. And so the market price becomes much less efficient. The market gets less liquid. If I want to use it as a hedge, it's much more expensive. Like, it's in general, like, it's much more damaging than just the amount of money that gets taken out of the market by the people who insider trade. But in exchange, the insiders do provide the information. The price does move in the correct direction, reflecting events that are in the future. And this, if we're paying attention, lets us figure out what's going to happen in the future and lets us plan for the effect of that price change. And in the stock market, we've pretty much agreed, and I think correctly as a society, that insider trading is quite bad. The net negative effects outweigh the positive effects. When you're dealing with prediction market, this is much, much less obvious, right? So, like, part of the point of a prediction market, some would say, like Robin Hanson, who, was one of the lead people behind prediction markets and someone I know personally, strongly favors insider trading in prediction markets. Because the idea is, that gets the insider to reveal their information, right? Like, we have, at several points during the war in Iran, prices have moved before an event has occurred. And in most of those cases, the movement has been correct. You see things reflecting a future announcement, a future policy decision, a future event, and then you can react to that information in advance. And this can also be true for less dramatic examples. And obviously, we don't want insider trading by, like, people in the military who are giving away U.S. military operations. That's bad. But you can see specifically why that's bad, right? Insider trading in the stock market, we talk about it, it's about theft, right? The way Matt Levine talks about it. And in this case, it's about classified secrets. Like, you're revealing classified information. You're damaging things that way. But other situations, insider trading in a prediction market, it makes us, that's kind of why the prediction market exists, right? To induce people to tell you what they know that you don't know. And sometimes that's just, I think about this problem better, and everyone agrees that's good. Other times it's, no, I learned something that you didn't know because I'm either involved in the decision, involved in the outcome, or I have a position to observe something that you didn't know. And then I've chosen to share that information with you in exchange for the profits of the market. And the current system is, it's up to you to understand that people in this market might be trading on insider information. And when that happens, you might or might not want to be on the other side of that trade. You might even want to figure out which side of the trade they're on and join them, right? So, like, if we're betting on the conclave to see who will be the next pope, right? And the price of one of the candidates spikes from 20% to 60% for no reason. Well, one possibility is you could say, well, 60% is way too high. I don't know why this person's so likely, and sell. Another possibility is to say, I know why this person has moved from 20 to 60%, even though I don't know the details of why. It's because some insider thinks it was 60%, but also maybe it's some random person who doesn't know what they're talking about. And so maybe you want to buy, maybe you want to sell. And, you're at a disadvantage because the insider is always going to win if they are based on good information. But there are many opportunities. There are many things you can do. And again, it depends on what you're trying to do with the market, right? So, like, if the goal of the market is primarily information, then the question is, does the insiders add more information by moving the price correctly than they take away by discouraging other people from participating? And in general, what we've learned so far, I believe, is that the insiders contribute much more information than they take away.
Right. And ultimately, it's a forecaster's tool. And as long as the rules of the game are laid out where participants understand that insiders get to play, then that's clear. I think it breaks when you say insiders are not allowed to play, but they play anyway, or vice versa. Looking at it as a forecasting tool, it's a more efficient forecasting tool conceptually, or can be. We've seen that in the political realm. And I'm wondering, I've seen two other areas that maybe are even more efficient than prediction markets, I'm curious. One is, I think you're connected to super forecasters, or at least know the participants like Professor Tetlock, et cetera. I'd love you to just define it for the audience, if you don't mind. And I'm curious of your views of that. And then well, let's start there. Let's start with super forecasters, then we'll get them.
Super forecasters is basically this idea of, everybody is a forecaster, right? Everybody is making predictions, even if it's not formal, about what's likely to happen in their world and in the world in general, and then acting on that basis. One thing you can do is you can run a competition where you invite either everyone or a large group of people to make a bunch of numerical probabilistic predictions about what's going to happen in the future. And what'll happen is their accuracy, if you have enough questions, will lie in a bell curve. And you can say, this 5% were the most successful. And then you can say this 1% were the most successful. And then the ones who are the most successful show consistent patterns on the types of ways that they think about these problems, how they approach them, like the types of tools that they use, the amount of time they devote to these questions, the types of questions they ask. And so Tetlock's idea was take this group of people, study them, see what patterns they emerge, call them super forecasters, and then employ those super forecasters to then make those predictions and aggregate the super forecaster prediction on a wide variety of questions. And when these questions are questions that the super forecasters are well equipped to answer, that are amenable to the same tools that they use to answer the questions where they impress us in the first place, super forecasters are remarkably good at generating probabilities and forecasts. They have been known to outperform implied market predictions, for example, pretty reliably in these situations. There are situations in which I feel super forecasters are quite poor. There are situations in which their methods and the incentives they have to provide accurate predictions start to break down. So if you are, I'm studying AI largely in my Substack right now. If you ask them to make long-range predictions about artificial intelligence's impact on the world in the course of decades, especially if you're asking them about existential risks and the chances that AI will kill everyone or something like that, super forecasters will reliably underestimate the risk, dramatically, and they will reliably underestimate capabilities advances in what the AIs can do. This is because a nothing ever happens style of prediction, not definitely nothing ever happens, but a generally nothing ever happens heuristic is actually quite successful in most domains of human affairs. And being skeptical of radical changes from the past is a pretty good heuristic. And also, this is one of the situations where if you're wrong, nothing that bad happens to you. If decades down the line, you predicted everybody wasn't going to die and then everybody does die, well, the least of your problem is that you made a bad prediction. The combination of these factors causes them to basically be too skeptical of things like this. But from their perspective, this is in a reference class of lots of other similar things where they're also skeptical and they're mostly right. And so they don't necessarily have that particular skill because that's not what we were selecting for when we figured out who the super forecasters were. But if you're asking a normal question, what's the chance that there'll be regime change in Serbia in the next 3 years? Just take a random country. Super forecasters are almost certainly your best normal bet.
Got you. And then, so that's interesting. So it's a conceptual fat tail thing where they may just miss on some elements that just feel too far-fetched for a super forecaster. Or I was going to say
What like everybody else, what you're trying to do is you're trying to, cultivate heuristics that work really well most of the time for the things that you care about and where it matters to you that you get it right. And so that's necessarily at risk of breaking down in situations that are out of that distribution that require a different type of conceptual approach. So what you have to do is you have to make sure that when you're dealing with super forecasters, that you ask yourself, is this a question in which super forecasters are going to be very good? And most questions that we in practice care about, the answer is yes. It's just that there's these narrow ranges of questions. If you're making, almost nobody makes good predictions on the order of decades or centuries because there's no chance for you to get those predictions right or wrong and then learn from your mistakes and then adjust because you're dead, right? It takes too long. So it's much, much harder.
Yeah, costly mistake. So the other one I was going to bring up is a really interesting article in the Wall Street Journal this weekend by a Mimi something. I'm going to put it in the notes because I didn't write down the name of the article. But basically, she's a neuroscientist, and she said person versus AI on predictions loses. Person with AI depends on the prompt and the conversation with AI. The conversation where they just said their view they lose again. The conversation where they take AI's view, they rate as well as AI. Really interestingly, the conversation where they push back on AI, they do better than AI and the people. So it's kind of this cyborg approach where it's human and AI. Any comments on that? I don't know if you've seen it or have used it.
I don't think I've seen the specific one, but I've seen other similar results that are very consistent with this. Essentially, within the realm of, again, things that are like amenable to normal prediction, AI has actually gotten quite good. And it turns out that like you can develop a set of heuristics. Now, if you just ask like Claude or ChatGPT or Gemini with a just like completely one-line prompt, their predictions will still be okay, but they won't be very good. But if you take the lessons of super forecasting and you ask the AI to follow similar methods, essentially, then the AIs can do well. And with a well-formed prompt, like the current AIs today, like they do better than all but the very top of humans, depending on how much effort the AI puts in and how much effort the human puts in. And they can make remarkably good predictions. And, you could do a lot worse than basically trusting the AI's probabilities as guides to your future actions. But we still live in Centaur world, right? Like chess was like this, right? As a central example, where there was a long period where humans were much, much better at chess than AIs were. Then Kasparov loses Deep Blue, Stockfish gets very good. And then it's clear that, an AI will beat a human. But an AI plus a human, where the human has learned how to judge and select between AI options, for a while outperforms an AI, right? And so like the best players for a short period were in fact AI human centaurs. And then after a while, now that's not true anymore. And basically just choosing the best AI is better. And like not even the world champion can meaningfully help select between those choices because it's just 800 points better than the humans are. And we've lost completely. Forecasting is going to go through a similar process. And right now we're still in the centaur realm, right? Where AI provides a lot of valuable information and you need to combine what you know and what your skills are that the AI still lacks with what the AI is really good at. And the way that you do that, as you describe it, is almost certainly to challenge the AI, right? You ask the AI, what's your prediction? What is this based on? What is your analysis? What were your considerations? And you look for the subtopics, right? The sub areas of that prediction, or either in logic or in facts, where you think the AI has made a mistake. You push back on those mistakes and you see what its response is. And if the responses are good, you say, okay, I think you have good arguments. I'm convinced that if you don't find the responses compelling, you say, okay, I don't agree with you. I'm going to substitute my judgment here for yours. Now let's redo the entire calculation and make a new prediction.
Yeah, so interesting. So prediction markets are potentially economically positive in that they're a great forecasting tool. Do you see that? Do you see an end game where AI basically replaces it, or you think AI just pulls on prediction markets and all this information that us humans all have together and just makes it better? And ultimately, sorry, just to add to it, it seems it's beneficial as a forecasting tool because it creates efficiencies, hedges, insurance, and the like for companies, which just creates value. Is that a fair summary?
So markets are one of the best ways we know to aggregate information from a lot of different sources. So AI is going to be another source of that information and another way to analyze that information. But markets, for a while at least, will be a very good way to amalgamate all the information from the humans and from the AIs. So, if you want to know the answer, you can take a prompt and you can feed it into your AI and you can ask for a forecast, and that's pretty good. But even better is you generate a prediction market and you subsidize it and you say, I want to know the answer to this question. And then everybody's AIs get together and all of their AIs make predictions. And then they trade on that market, including AIs that have access to the information sources that you don't have, that don't want to reveal the original information directly. And then the source of all of that trading generates an even better prediction than any one of us could have made by ourselves.
Yeah, no, that's great. So I want to flip the conversation now and try to help the listener in maybe making better, more informed decisions. You've focused on world models and decision systems. Could you define both for the audience?
So a world model essentially is just how you think like the world works. So we talk about things that are made of gears. The idea being like, what's the mechanism? Why does closing the Strait of Hormuz raise the price of oil? Where does it raise the price of oil? Why does that happen? Where are there not enough barrels? Where do there need to be more barrels? Where do the shipping lanes change? And the more your model is made of gears, the more you have a world model of exactly how things work in the relevant areas, right? At whatever level of abstraction makes sense for you to use and whatever you have access to, the better you can figure out what the implications are of any given option, every given decision, any given action, any given development. What was the other term you wanted to? Sorry.
Yeah, and then decision systems.
Right, decision systems. That's not a term that I would usually use, but like basically, there's plenty of similar things, right? A method of making decisions. So, right, like how do you decide what you're going to do? And over time, you want to develop, you could call them decision systems, but heuristics, methods, procedures for doing this. And, behind all of this should be a decision theory, meaning, how do I decide what the right decision is once I have all the information and I understand like what the potential consequences are of all of my actions? What do I value? How do I think about this? And then you want to combine all of that into a method. So one of the things that, I talk about sometimes is like there's causal decision theory, there's evidential decision theory, and there's functional decision theory. And effectively, you want to be operating on some form of functional decision theory, which in practice means you are choosing as if you are choosing a system by which you will react and by which people whose decisions are correlated to yours will also react. Not just choosing like locally what will do the best for me right now in this particular spot, right? You shouldn't just lie to somebody because it helps you get a cookie right here. You should ask yourself like, what's a better policy for me that also like correlates to a policy for everyone? But you also have to decide what you value, right? Like, what am I trying to accomplish in the world? What am I maximizing by, looking at this versus looking at that as a potential future outcome? These problems, they're huge, and I could talk about, think about them forever. That's the 30-second version.
That's the 30-second. I got you. So in the world model, I mean, so the concept behind the world models is really being proactive and thoughtful about your views. And the reason I'm saying it that way is just in the world of social media and the world of reaction. Like, I'm just curious of how that the whole goal here, if I have it right, is to actually understand to have some logical understanding of your surroundings. Am I close there? Or like
have a causal model whereby what things cause what other things? Why do things matter? How do they matter? Right? Because it's so easy in today's world to fall back on kind of vibes, right? To fall back on how things feel or how things make you feel, or, does this seem like a good idea? But like, exactly how, exactly why? And then will this actually help me accomplish the goal that I want? Well, how would it do that? And the more you understand about what's happening, the better your chances are of changing what happens.
Right. I got you. And so I guess tying it back to both prediction market, well, let's tie it back to prediction markets for a moment. So that's a worldview where now you could look at the Strait of Hormuz, and maybe as an individual, you could think about, okay, how does this affect me? I mean, could you have like almost a micro hedge? Is that like, should people be participating in prediction markets based on their wallet of where they think inflation's going over the next half a year?
So in theory, whenever you ask why doesn't something happen, the answer is transaction costs, right? Basically almost by default. And so this is one of those clear cases where the answer is transaction costs, right? If there were no transaction costs in time or money, you would be very tempted to constantly be hedging all of the various different things in your life. Like, why is it that I wake up today and I am likely to be 1% richer or 1% poorer than I was yesterday? Why? Because I have a lot of beta exposure to the stock market that maybe I don't want. But that's sort of not very hard for me to efficiently avoid while still living my life and just having a good time. And I've decided it's better to just accept it. And similarly, is it correct for me to be strictly flat all of these markets? Well, no. That doesn't mean that it's worth, especially my time, right, to figure out the right hedge in order to fix this problem. And then to have it in my mind of the question of all of those things, right? I think that one thing that I learned by being a trader for a long time is you have to put that out of your mind when you're done trading. But you have to say there's a time and a place to try and make good decisions on trading and make good trades. And it's not that you don't observe the world the rest of the time to try and learn things that would be useful to you and help you update your world models and decision mechanisms to make better decisions. But when you're at home with your kids, you can't be thinking about trading, right? And it was especially brutal for me the year that I was trading crypto, because the crypto market never closes, right? And this is why I worry about the fact that the stock market is going to be open 24 hours a day. I think this is kind of terrible, if only for people's mental health. Because like, I liked the idea, like when I worked at a trading firm, I get in at 7:30 in the morning, whatever it is, so I can help with setup and getting ready. And then the market closes at 4. And after 4 o'clock, I'm going to still have some work to do for some amount of time. But unless we left something specifically hanging, I'm not going to do any trading after 4 o'clock. I'm going to hand that off to the office in Hong Kong. And after some point, right, maybe it's 5 o'clock, maybe it's 4:30, who knows what it is, some days it's later, I'm going to leave. And I said to myself, once I leave, I'm done, right, for the day until I get back in the morning. Because that's the time that I need to live my life, right, outside of the office. And similarly, like, now that I'm working on AI, I say to myself, well, if I'm constantly thinking about how to maximize my portfolio, that'll just take up too much of my brain. I won't be able to accomplish things I want to accomplish. And that's more important to me than some marginal amount of alpha. So I set aside specific times when I'm like, okay, now I'm going to make a financial decision for myself and I'm going to maximize. But most of the time, I'm going to do much more buy and hold. I'm going to do much more passivity than is strictly correct, because I just need to focus my world modeling on other questions that I find much more valuable.
Yeah, no, I think that's right. So ultimately you have the long-term investing bucket saying, okay, I'm going to be in the market. And then you have the short-term items that you look to work on in your life. In your life, it's AI. For other people, it might be they're a doctor or they're working on some solution, and et cetera, et cetera. And it's interesting you said what you said, Zvi, in terms of the cryptos. I started off as a trader as well. And I remember at the moment really appreciating, especially relative to other jobs and functions, of, hey, I show up at 7:38. At 4:15, I was an options guy on the floor. At 4:15, I'm done. And on the weekends, there's nothing you could do. You could be so stressed out about a position that you may be holding, but there's nothing you could do. So you might as well move on. And nowadays, in today's world, it's more amorphous across all jobs of where, and trading's obviously a different animal than most jobs, but it's more amorphous of when you get pulled and when you don't. I want to come back to one very quick conversation on prediction markets, in that when you think about who it accrues to, so you mentioned, and I think it's so important, I'll call it friction costs. There's a bid ask, there's a cost. So if you go on to Kalshi or any of these, there's a platform cost.
Yep.
So you have a bid ask spread, you have a platform cost. Are there any other costs I should think about? I mean, those are the two big ones, probably.
So the main costs obviously are, the bid ask spread and the platform cost. And also, if you're going to trade more than once, right, you have to understand that you're shaping the market continuously, right? You have impact, right? Just as any other trade. And it's very, very easy to trade remarkably high percentages of volume on a prediction market if you're not being careful to watch that. And you actually want to do substantial size. Those are the main things to think about. As I said before, I think that we underestimate the value of mental transaction costs, right? Not the cost in money, but the cost in time and the cost in focus. And so don't get involved in the market unless the market justifies you paying those costs.
Right. So there's a cost of time, there's a cost of focus where you could be doing potentially better things for you. And then I think it's something like 3 to 5% of our society may have addiction issues. And so for those people, there's a full mental cost of that.
I think that prediction markets are mentally good for most people. I think that they train valuable skills. So one of the reasons why I think it can be good to do some amount of predicting is because it trains you to think in probabilities, it trains you to think in deltas, it trains you to think of, how does this information that I just got impact the probability of this event? It asks you, and also helps you do things like, you size your trades, it makes you think like a trader, think like a predictor, think like a rational actor. I think these things are very valuable, but it can overwhelm your life, can take up too much of your time, and ultimately, as you say, addictive behavior is a real problem. I used to be in another life, somewhat involved in sports betting as well. And, I think most people who bet on sports, they get a lot of entertainment out of not very many dollars. I think it's like very good for most people. But I do worry that's completely outweighed by the small percentage of people whose lives it just ruins.
Right. Right. And going back to your earlier point, I do, the idea of understanding probabilities through game is so valid. One item I really find in my position as an outsourced CIO, speaking to clients, are people think in dollars, and dollars make no sense. It really should be percentages. What percent of your dollars do you want to put something? Not, oh, I'll put $10, $10,000, $100,000. It's kind of meaningless if you don't know the denominator. It does, I guess it helps and assists in those ways. I'll end, I believe if I have it right, are you a Mets fan like I am?
I am.
And so do you gamble around the Mets? Is there within your realm of world markets and decision, like, is there a hedge there, or do you go the same way?
So, I'll tell a funny story of how we thought about this. So, I had a business partner, and we would bet on sports for a while, and then I would, be a former bookmaker for like an online website for a while. And during the period where we were gambling, we would in fact talk about what we called compensation for our pain, which is basically just strictly a hedge, but like phrased better. And so the idea was, how much will it hurt when the Mets lose today? Okay, maybe we should bet that much against the Mets. And that was called compensation for our pain. And other days we would bet on the Mets because that was what the members were telling us to do. But we'd understand what it was. And like, at the end of the day, we would joke about it, right? But like, we wouldn't spend substantial amounts of alpha. We wouldn't make a bad bet against the Mets just to hedge. But we would do it because we thought, well, I expect the Mets to lose today. I think that like the price is wrong. And therefore, like, I should bet somewhat bigger than the numbers strictly would normally indicate in that situation, because I'm going to watch this game and it's going to be painful. And I want to make sure, like, the worst thing to do is to bet on, like, say they're playing the Phillies, right? And you bet on the Phillies and the Phillies win and you're not even happy about it. And your life is worse because you had to watch that debacle. And like, but you don't feel good about it, because if the Mets had won, you would have lost money and you wouldn't be that happy about that either. Right? So like, you're thinking about, okay, I want to make sure that I bet enough here that I don't have the trader's lament if I needed to do more, and so therefore I'm unhappy, that I would bet enough that like, okay, I am okay with the Mets losing today. And when you're actually watching the game and you're like, sports at that point was like the main thing I was focusing on because I was betting on sports, those numbers can be remarkably high, right? But for most games, especially now, like, it's not something I particularly care that much about, especially during the regular season. And when I stopped both betting on sports and making the odds on sports, I said, okay, I am going to stop. For the same reason we talked about trading, right? I don't want to be constantly thinking about what I can do here. And you talk about percentages of your value, right? So like, I've done pretty well in life, right? Like, not as well as some people, but like well enough that I'm comfortable. And I would have to bet a remarkably large amount of money before it was a significant percentage of my wealth. And when I think about betting that level of money on a game without having like really intense research and all my models updated and like really knowing what I'm doing, I'm like, no way, I'm recoiling in horror, right? There's no way I would do that, right? And I certainly wouldn't do it for fun. And so like, okay, let's just not do this. Obviously, if my friend wants to bet $5 or whatever, like, sure, I don't care. But like anything like for real, I've decided I'm going to do this like maybe once a year when there's an event where I'm like, no, I can't take it. This number is so stupid. Like, I know enough from just watching that I know this number is insane. And it does happen. Because there are lines that are just so naked eye wrong, you can just massacre them, but it's rare. You have to keep an eye out.
Yeah, no, that's great. And in some ways nowadays, given how pathetic the Mets are, just a win makes one happy enough, and it's all good.
Yeah, at some point, even though you're a fan, you're like, well, actually, like, I like the story value of continuing to lose on this streak is actually better. And like, the season's done, right? We're not going to,
It's not going anywhere.
We know this is not our year. And you know what? I'm a Mets fan. I'm used to it not being my year. That's okay. Let's have a story we can tell. And then like, that'll give us karma we've stored up, right? Kind of. So we can cash it in next year when everyone's healthy. We've made better roster decisions. Then we have, hope and faith again in April, like we always do.
That's right. And then you have that incredible turnaround story. Zvi, I really appreciate you coming on today. It was great speaking about prediction markets.
Yeah, it's fun.
Have a great one. That's it for this episode of Investment Wars. We're not here to chase narratives. We're here to challenge them, because better investing is not about having the loudest opinion. It's about having the clearest process. Subscribe on YouTube, Apple Podcasts, and Spotify so you don't miss an episode. And if you're a financial advisor, check out our companion show, Advisor Wars, where we tackle the business of advice. Topics like alternatives, taxes, AI, cash management, and how growth-oriented firms scale smarter. If you're an advisor interested in partnering with Obsidian CIO, or you'd like to suggest a guest, reach out at ocio@obsidiancio.com.
Obsidian CIO sponsors the podcast to further education and critical thinking about the factors that affect markets and investing. And the podcast does not provide investment advice. Investment advice is offered only to clients of Obsidian CIO who have entered into an advisory agreement and with whom Obsidian CIO has identified individual objectives, risk tolerance, and other investment needs.